Hello everyone and welcome to this edition of Market Wrap with Raja. And we have been noticing that the markets have been quite choppy over the last few days, especially in the month of September. And we can see that last week we had discussed on the volatility of the markets and the possibility of the market to retrace into the support levels as we had identified. So let us take a look at what is the kind of setup which is emerging for the coming week. Before that, what actually triggered the reaction on the positive side for the markets? So that's where I would like to highlight, and I've been iterating on my TV shows on Bloomberg, Z Business about the possibility of the market reviving. And one of the key reasons which I was highlighting was the prospects of USD INR. If you all recall, people who have been subscribing to our YouTube channel would have definitely benefited from our prediction of 72.50 on the USD INR. And also, we have been highlighting it to our corporates as well that the 72.50 is a key level to watch out for. So let's take a look at what are the weekly charts saying. And if you can see here, the weekly charts which I have identified clearly talks about the prospects of USD INR hitting into the 72.50 levels. And you can see here on the chart which I have shown you that 72.50 did retrace right at the beginning of the week. But if you use the right set of tools, I have used the Fibonacci concepts here. Fibonacci is a very powerful tool, and we have been taught by our mentor Dr. Narayan that once you use Fibonacci levels consistently, the power of Fibonacci will impact you. And here is where for people who are not familiar with the concept of Fibonacci, should definitely take a look at our Applying Fibonacci Techniques webinar, where Dr. Narayan has beautifully illustrated the concept of Fibonacci and how you can use this concept in a more detailed manner. And that's what I have used here today. And the last week I showed you that it has retraced into 72.50 levels. Well, it's not only on USD INR. Let's see what it did to the Nifty. You can see here there's a Nifty daily chart. And right now I'm plotting on the last leg, rising leg, which we saw from the end of June. You can see here that the strong reaction into 38.2% Fibonacci retracement. What better can it be? And right here, what do we have? We have a piercing line which has emerged, and a beautiful piercing line gives you a nice run to the upside. And a gap up opening on Friday clearly was displayed on the price action as well, and the collaborating evidences which emerged from the USD INR actually helped the market give a positive thrust to the traders, and we ended the week well. Last week too we had a good closing, but let's see what is expected for this week. So for getting some cues on the current action, we also take a look at, say, the hourly charts. And on the hourly charts, if I load some data out here and I put on to check out whether we have reacted into the oversold level, you can see here we had reacted into the oversold levels, and a divergence which emerged from the oversold actually has produced a rebound. So all this augurs well for the coming week. But then what we really need to take out and be careful about is how are we going to react based on the pivot levels. So you can see here, these are the pivot levels which we had highlighted last week, and you can see here that it had dipped down into the weekly S2. I have been highlighting this in my market wrap, and this proving to be quite effective. The last week it's also we saw the market react into the S2 and give a good closing, and this week too market has reacted into the S2 levels. This is the current chart, and what you can see here right now is the last week action, and you can see here it reacts into the S2 around the 11,280 zone, and from there we witness a strong rebound. So multiple evidences which suggest that the Nifty was due for a rebound, and now what you see here is the current scenario, and the Nifty has once again closed above the weekly pivot, which is at 11,480, and right now the immediate resistance is 11,600. So 11,600 to 11,670 is the rough targets. So target 1 and target 2, so to say, for the bullish prospects on the Nifty. And on the downside, one can look at 11,300 as a strong support area. Why am I using the word strong support area? Is because the weekly S1 and the monthly S1 are coordinating at around the same level. So a confluence of supports. Support resistance is a very important concept, and in our elementary technical analysis program, the Winning Trader, I show how to use the concept of support resistance in a more detailed manner. Everyone knows what does a support do and what does a resistance do, but do you really know how to make money out of support resistance? That is what I'm highlighting to you every week, and this pivot levels is another way of finding out how to react and how to be proactive. So you can see here the large dip into this support zone is also a good opportunity to buy into. Going into the markets for the next week, you have the support zone around 11,300, and on the upside you have 11,600 to 650. So that sums about our Nifty plan of action. So what do we do on the other index, which is actively traded week after week? You all know what am I talking about. It's the Bank Nifty. So if you take a look at the Bank Nifty charts I have shown here, you can see it dipped down into good value area around 26,900 mark. You can see here the previous levels around the April to June, July. There was a brief bit of consolidation, and then the market took off after mid-July, and now the markets have again reacted into it. What we found was the last leg, it reached into a 61.8% retracement around this zone. The zone which I am highlighting here is a very good support zone. So around 61.8%, which is around the 26,900 to 26,800 zone, there was strong support which emerged. And how did I identify that? Along with the Fibonacci, there was a good shadow, lower shadow emerging here, which definitely said that probably the decline in Bank Nifty has ended for now. And all this is producing a strong reaction in the banking stocks and also in the finance counters. So Bank Nifty is set at a good pace, and it is set for some upside. The Nifty is set for some upside. So one should actually be looking to head into the next week with a bullish bias. And that's why I am stepping away from my one long, one short approach and getting into a two buy approach. So for the two long approach, what I have shortlisted for this week is one stock is TVS Motors. TVS Motors, if you can see, I have used our technique, a trend cross method, which we call it, where we use a specific period of moving average, which I again cover as part of my Winning Trader program. And this program definitely helps you to find out how to approach the market and how to approach the market in a consistent and profitable manner. It's very easy to learn from many sources, but then ultimately when it comes to application, you need to know how to apply it consistently and effectively. And that's what I do in my programs. Under the guidance and mentorship of Dr. Narayan, we have been able to come up with fantastic programs where we give you personal attention and we ensure that you as a trainee participant get more out of it. So for those who are already familiar with the technical analysis concepts, then you also have our real-time market mastery. What is real-time markets all about? Real-time markets is all about applying, application. On one side you have knowledge, the other side you have application, and between them is a bridge. And many times people burn that bridge, and that's why they are not able to make consistent profit. This is where you need an organization who is able to help you find out how to build that bridge back, so that you're consistently going back to your knowledge and going back to making profits. We ensure that you are able to generate positive expectancy. If you are not a positive expectancy trader, then there is no point being in the market. Then you are a boom and bust trader. That's not what we want you to be. We want you to be a profitable one. And that's why I am taking pains to share with you our knowledge, because we got a lot of inquiries where they said that why don't you share your in-depth knowledge on the markets through some kind of videos, etc. So that's why I have started this series again, where I'm highlighting to you every day the prospects of Nifty through various aspects of technical analysis. I'm talking to you about pivot levels, I'm talking to you about Nifty, I'm talking to USD INR, talking about Bank Nifty, I'll be coming up with other indices as well in my next market wrap. So out here you can see that the prices have actually consolidated well. They've given you a buy signal. You got a buy signal here. You see here where I'm showing my green arrow, you had a buy signal here, and from there on the prices are moving now, and the consistent move is now indicating that the prospects of heading higher becomes quite evident. And what are the other factors which are emerging? The other factors which are emerging are the momentum indicators. Momentum indicators are sometimes overlooked. Many people ask me, why do we actually need to see momentum? Price is all enough. But then when you are able to study the momentum in detail, for those who are not aware, we have a momentum indicator, we have a webinar on ADX itself, and we also have a webinar on RSI. So why are we dedicating a webinar on RSI, on ADX? Because we find that they are one of the most powerful momentum indicators and more widely used. But the way to use it, normally people say once it comes to 70, sell it off. Once it goes to 30, sell. Once it goes to 70, buy. But that's not what we want to say. We want to say how you can buy even above 70 and not exit at 70, and how you, when it goes to 30, you should look at prospects of selling it even more. But then how do you actually take a view on all these, and how do you build a context? Building a context in the market is the most challenging thing, and that's what we show you in all our webinars. You can see here now TVS Motors is a definite buy opportunity here, and on the charts you can see that the plus DI line is actually inching higher, and all this definitely suggests that TVS Motors is a good potential for a buy on the upside. One could actually look at dips towards 570 levels also as a buy opportunity with a stop loss below 565. One could actually be looking at a prospects of 610 to 615 in the next week. So this is one counter which we are recommending as a buy. The other is Tata Steel. Metal stocks have been under the hammer, and after sharp declines over last few weeks, this stock is now rising, and this stock is showing good resilience to the negative trends which have emerged in the market. And you can see even based on our RSI techniques, this stock has been withstanding the pressure, and using my favorite tool Pitchfork, I have seen that it is able to hold above the median line for quite some time. And now if it's able to consolidate, it did move well on Friday. I recommended it as a trade on my Bloomberg Quint show, Indian Open, which I get featured every Friday on Monday. And now this stock is getting risen. It's rising. Strong momentum is being witnessed, and now RSI is picking up once again. So the prospects of this Tata Steel to move higher is quite good, and a target of 645 can be envisaged. Any dip towards the median line around 600 levels is also suggested as a buy opportunity, because the prospects of the stock to go higher is just brightening up by the day. So these are the two stocks, TVS Motors and Tata Steel, for a buy. And the Nifty, Bank Nifty also looks set for some upside. So in all, the market looks set for some more gains in the coming week, and one should actually be looking to approach the market with a positive aspect. So all these things and more interesting kind of setups and various kind of tools and techniques I'll be sharing in my market wrap. So what you could do is you could subscribe to our channel and click on the bell icon so that you get notifications about market wraps. There are other kinds of videos which I'm going to post. So all these videos and interesting sets of technical analysis concepts can be updated, and you can stay in touch with the Chart Advice team, because there are more interesting knowledge information session and sharing which is going to happen, and you do not want to miss out on it. People who got connected last week and saw our videos have profited from it, because there was a buy and a sell. Now this week there are two buy prospects. The basis for it also has been set. So all this gives you a complete picture on how to approach the market. I am sure that you would have enjoyed watching this market wrap. do leave your comments on the YouTube channel, and I'm sure that you will definitely be able to profit from the videos, and you'll be able to gain much more about technical analysis concept. For more interesting details and other concepts, learning, etc., you could get in touch with our office. The office contact number will be available on our YouTube page of this particular market wrap. You could contact our office and get to know more about our products and services. With that, I'll bid you goodbye. Happy weekend, and we'll see you again next Saturday. Thank you.